Even insurance carriers sometimes need to buy insurance on their insurance. And that's what we'll cover in this short video, the reinsurance choices available to you in Insurance Challenge. So let's go to the underwriting screen. You can see in the section here on reinsurance that you can get reinsurance on your specific product lines. And whatever product line you choose, the reinsurance options available are quota share 80-20, which means that you keep 80% of the gross written premiums and losses on that product line, and the reinsurance company takes 20%. Quota share 50-50, excess of loss 1.0 to 1.3, which means the reinsurance company will cover losses on the band of policies that come in with a loss ratio between 1.0, also known as the attachment point, up to a loss ratio of 1.3. And excess of loss at 1.1 to 1.3. So this is a narrower band of coverage at a higher attachment point. If you do choose a reinsurance method on a line of business, you'll have to pay for it in one of two ways. Quota share, for instance, by giving up a percentage of your book of business to the reinsurer. For instance, if I choose 80-20 quota share on commercial casualty, I'm charged 20%. Thus, I give 20% of my gross written premiums to the reinsurance company. And 50-50 charges 50% of gross written premiums. And if I do excess of loss at 1.0 to 1.3 on commercial property, I'm charged 10% of gross written premiums, the reinsurance company, to cover those losses. An excess of loss at 1.1 to 1.3 on commercial property covers less than the 1.0 to 1.3 band, so you're charged less, 4% of gross written premiums in this case. But you get something in return. Doing quota share reinsurance can help your risk position, especially if you're growing quickly. For example, without quota share on the commercial property book of business, my net written premiums to surplus ratio is 1.79 if I go to the KPI screen. But if I go back and I do 50-50 quota share, and then I go back to the KPI screen, the premiums to surplus ratio goes down to 1.46. And that can make a difference to regulators and to your solvency ratio, which has gone up, and possibly to your credit rating, which in this case has also gone up. And with quota share, there's no impact on your loss ratio. You cover the losses on your portion, and the reinsurer covers the losses on their portion. Underwriting expenses will also be reduced because you're ceding that part of your book to the reinsurer, or it will be offset through a ceding commission paid by the reinsurer to you, the primary insurer. And excess of loss can improve your claims position. In the end, it's up to you whether or not to do reinsurance based upon your strategy and the product lines and segments that you're specifically targeting. There's a cost and a benefit that you need to weigh as you make your choices. Okay, that's what we have for you. Good luck.